G'day folks, welcome back to another update for Pete's Investing. Today we're looking at Microsoft. There's a fresh bullish breakout. We're going to be including some back testing. So don't forget to hit that like and subscribe button to support the channel. So in terms of outlook, as of today, May 2nd, Microsoft reported strong fiscal first quarter 2025 results driven by robust cloud and AI growth. Revenue was $65.6 billion, up 16% year over year. Net income was $24.7 billion, an increase of 11%. Earnings per share were $3.30, surpassing expectations. Microsoft Cloud revenue $38.9 billion, up 22% year over year. Azure revenue growth 33% year over year. Capital expenditures increased to $21.4 billion from $14 billion a year earlier, reflecting significant investment in AI infrastructure. Stock performance, shares rose 7.6% post-earnings, reflecting investor confidence. Microsoft's strong performance underscores its leadership in cloud computing and AI, with continued investments positioning the company for sustained growth. So first off, we look at the 50,000-foot view. We go out to the monthly. We see what's happening on a larger time frame. So on the monthly, you can see there it's actually above the moving averages on the price chart, but also it's still below the moving averages on the CCI. So somewhat of a neutral positioning. I wouldn't call it bullish nor bearish, but pretty much consolidating at the moment, and it could go either way. Now, it's bullish on the price chart. Let me just zoom in a minute. Now, you notice here, if I zoom out, you'll notice here we had this period was a bearish divergence, lower highs on the CCI versus higher highs on the price, a very long-term meteoric rise during that consolidation phase on the CCI on the monthly. You can see that it started back in 2015. Now, with this retrace of these bearish divergences, if I was to draw it from that point down to that significant low, you can see there it broke into that 23-38% range. If I zoom in there, between that range there. So it broke into that 23-38% range and it bounced out of there. And that's a minimum retrace that happens more than 90% of the time. Now you'll notice as well, there's another bearish divergence. So another bearish divergence, and that's happening in this smaller time frame between that period, from that high to that high, higher highs there, and the same period on the CCI goes from that high on the CCI to that high. So that's a bearish divergence as well. Now this is a bit trickier, this one, because again, what we normally do is take it back to the previous low before that divergence started. So that may very likely be that area there. So if that was the case, and take it back to that, what's happening? It's here, there. Bit slow in responding this time. You can see there it's pretty much already hit that 23-38% range if you take it back to that level. And so again, it's a bit subjective. I don't trade these, but I look at it potentially just to be cautious about going long if I was going to trade it. Anyway, that's on the monthly. So monthly, somewhat neutral positioning, even though it's bullish above on the price chart. On the weekly, likewise, you'll notice here we had a bearish divergence, higher highs on the price versus lower highs on the CCI, and that actually fell off as well. And again, if we were to draw a Fibonacci on that, between that significant low there, you can see there it broke down below almost to the 50% level. And that's how you draw those divergence. Now, in this case, it's broken up on the weekly, so that's giving us a fresh bullish break to the upside on the weekly, and also bullish on the daily. So again, if we drill down on the daily, zooming in first of all, or zooming out, first of all, you'll notice here we had a couple of bearish divergence. There was one back here. That was on our last video we did on Microsoft. If I was to adjust that. Again, I don't trade these divergences. I look at them as potential cautionary. When I'm trading, I don't get too overboard on going long during this period. And you can see there it's fallen off as well on the daily and been consolidating in that range, and that CCI was dropping off as well. But again, it's finally broken to the upside. Now, if we go to the intraday charts, we always look at the micro level. Even if you're trading on the daily, we look at the micro level, see if there's any micro moves. So back here, for example, you see there, and that's not a divergence. Let's delete that. We look for any divergence on the 1 hour chart. Now back here we had a bearish divergence, for example. Lower highs on the CCI versus higher highs on the price, and that actually broke down very strongly. And if you pull the Fibonacci back to that level, these very narrow divergences, by the way, can have a very strong impact to the direction of their divergence. So in this case, a very strong impact to the downside. Now here, I'm just looking for any divergence here that may caution us about buying. If I was seeing a bearish divergence somewhere here, I'd probably be cautious about buying. But just notice as well on the hourly, it's broken into that moving average range. But that's not a showstopper, so long as the daily's moving up further to the upside. Now I've got some back testing here. This is on the daily trading, and if I change this chart to the weekly, let me just get Fibonacci. So what we've done here, I've started the back test on the stop loss approach and the average down approach to the early 2023, and that goes back to this period back there on the, just demonstrating the long positions here. So you would have gone long on the daily based on the weekly. Now again, it's a bit too early to sort of back test on this point here on the daily because it's only fresh and we haven't got much history to demonstrate. But again, to demonstrate from back here on the early 2023, that's where the stop loss and the average down methods work. And the way you trade that is when the CCI is a fresh breakout and so is the price on the daily, and the weekly is also trending that way, you take those long trades. Now the stop loss approach takes profit at 3%, so does the average down, and the stop loss stops it out at 5% loss, but the average down waits for a new entry if it drops by more than 5%. And basically you stop trading when the weekly, in this case, breaks into that moving average range. So you can see there in that first point, you would have stopped it out near the top there when that CCI came close to touching that CCI band, and that would have closed you out there. Even though you had a few positions open, you would have closed it out there with a small gain. Again, I'm trading $1,000 lots here. Of course, if you put in a lot more, you have to be prepared for a potential drawdown or bigger loss. So I'm using $1,000 lots. You can put in 2,000, 3,000, or whatever you choose, but I'm trading on $1,000 lots, demonstrating the strategy. And there you've got, for example, if you close that out at that point there, back there, you would have gained, when it touches the moving average band, you would have gained $148 on the average down approach, and you would have been break even on the stop loss approach. So I'm just looking at these figures here, up here. And then you would have reopened the trade on another fresh trade there when it broke above the weekly, and you wait for that period also to break above on the daily. So you would have started trading from that point, and you would have closed it out again when the CCI touched that moving average band at that point. I prefer to close it out on the weekly on the CCI touch point because that gives you an earlier signal. I mean, you notice there, for example, back there, that was near the high. Also back here as well, that was near the high there of that little range. So you would have stopped it out there as well. And from that point, had you kept it in the trade through that whole period, even during that decline, that would have been back there. The stop loss approach would have generated $48, and the average down would have generated about $600. Now, I'm not suggesting you keep that trade open during that period. I'm just demonstrating how this works, and don't let that fool you, because if that kept dropping strongly, you would have been in the drawdown during that period. And I'll explain that in a minute back here when we see that happening. But overall, again, when you see this on the weekly, when you start seeing the first sign of a bearish divergence, like that would have been your first back here, that would have been your first indication of a bearish divergence on the weekly versus higher highs on the price. Probably avoid taking any long trades, even though the price seems to go higher. Watch the CCI. That's really your indicator to show strength or weakness of the stock price. Now, what it's done more recently, if I go to the current period, you'll notice here we had a bit of a drawdown here on the average down approach. Overall, had you kept the trades open through the whole period, the stop loss approach would have generated $99 and the average down would have generated $4,040. Again, I'm not telling you to do that. Avoid trading when it's in a downtrend. But I'm just demonstrating here, you can see there is a strong drawdown that would have lost you about from that high. Let me just zoom in here. From, let's say you started from that point down to that point, you would have been down about $3,300 from that high of profit down to a loss below the $100,000 baseline. I'm just using as a baseline because that $100,000 level or 100,000 point level. Whereas on the stop loss approach, being a lot more conservative, you would have been down about $86. So just be careful with the average down approach. It's only for experienced traders, and you've got to really follow the rules on trading. So if you're new to trading, we're now including a weekly video series, Pete's Investing Plus One, as part of the Pete's Investing channel. And the Plus One videos are a dumbed down version of our strategies, giving you a better insight into our analysis and help you follow our daily videos. If you enjoy the content and if you like the bullish breakout or the fresh bullish breakout, we do this on a weekly basis. Feel free to subscribe to the Patreon page where we publish those in PDF format and download them into Patreon. And that gives you scans across various regions of the world's markets. Thanks for watching and see you in the next video.